Well, let's get you more perspective now on SPACs and what they mean for Wall Street. I'm joined live via Skype by David Nelson, Chief Strategist at Belpointe. Welcome back to the show.
Thanks so much for having me.
So for people who aren't familiar, walk us through the SPAC process again, or some call it the pre-IPO hack, in terms of how and why it's formed to the acquisition process.
You know, John just stated it very well. It was a great tutorial. In essence, it really turns the IPO process upside down. Traditionally, a company with a new product would approach private equity. Private equity would nurture that company and eventually want to cash out and take it to an investment bank, which would in turn try to sell the shares, but it would go through an entire regulatory process that's pretty stiff. SPAC turns that upside down because you're really starting with almost nothing. You're starting with an empty shell of a company. Investors put cash in that company, and then they're going to go out and flood the marketplace looking for deals. The problem, as you just stated, is how many there are. There were a couple of $100 billion last year. You got just this year 56 SPACs in the first 3 weeks. That was $16 billion. That much capital out there tracing, searching for deals. By definition, the quality of those deals are going to go down, and that's inherently the problem that we're looking at right now.
And it's interesting because SPACs themselves aren't new, but they're getting renewed attention. We're seeing this much faster pace, as you mentioned. Why is that?
It goes all the way back to the dark days of the 1980s, and these got kind of a bad reputation. And it's understandable why they're starting up right now. They're extremely lucrative, but based on my analysis, I look at this. Not everything is bad. Like everything in life, there's good, there's bad, and in some ways SPACs can serve a purpose, and some of these SPACs will do well. But right now, SPACs look a lot more like a compensation scheme than really an investment vehicle.
So then as you take a look at the upcoming listings that are taking that SPAC route, why have they gone this route?
Because they've been going up, and price momentum is very powerful, and price momentum works right up until the time that it doesn't. And right now, we seem to be in a mindset with investors seem willing to pounce on almost anything that moves. Now, some of these things are going to work out. But you have to ask yourself the question, do you really think 3, 4, 5, 6 years from now, there's going to be 150 SPAC companies making electric vehicles and or batteries? Probably not. Some of them will work, but a lot of them will not. And some of these will, in fact, probably go to zero.
So then how challenging is it then to manage performance expectations?
It's very difficult, and I have no problem putting capital with somebody who's an experienced investor, but look at some of the people who are starting these right now. You've got basketball stars, football stars. Shaquille O'Neal announced a SPAC. Larry Kudlow from the White House has a SPAC. Even former Speaker of the House, Paul Ryan, has a SPAC out there. And it's going to be on and on and on and on. Pretty soon, I would expect Hollywood. Anybody with 15 minutes of fame that can stamp their name on this thing is going to try to get in on the action because it is immensely lucrative to be the sponsor of a SPAC.
So for people who do have this fear of missing out, then what are the biggest risks of going the SPAC route that people should be aware of?
I think you need to look at the quality of the management teams that are doing this and how diligent in the process are they going to be. Are they going to really vet some of these companies? Some of these companies probably shouldn't be brought public, but on the bright side, some should. I looked at one today, and it's not one that I have an investment in. QuantumScape had a very big move today. They announced a new technology. It looks very promising in terms of lithium batteries. There's companies like that need capital. And if it can get it to market quicker, all the better. If I was an investment banker, I'd be worried because this is really cutting in on their action.
So then you mentioned investment banks, and also Silicon Valley. How do they feel about SPACs?
Initially I think they were gun shy and not very interested in it. But now Silicon Valley seems to be embracing it because it's a way to come public very quickly. And one of the regulatory issues that you have to deal with as an IPO, you're not allowed to give forward guidance in a traditional IPO when you're working with an investment bank. The SPAC process turns that upside down, and now you're almost permitted to say a lot of things you couldn't do in the past. You can be very promotional, and in fact, many are.
So then, as I know, Amsterdam has become an attractive destination for SPACs in Europe. How popular is this practice outside the US, and where is it getting the most attention?
Gosh, I don't know the answer to that question. I know right now it's extremely popular here, but if it's working here, the only way it's going to stop it on a worldwide basis is regulatory authorities and local exchanges would have to come out and put some kind of guardrails for them. It might slow down the process. if they continue to move at this pace, I would expect at some point in time this is going to be something, a part of a conversation that we're going to have in Congress. You can bet that congressmen, senators are going to start to weigh in on this pretty soon.
Indeed. Well, thank you so much. David Nelson there, Chief Strategist at Belpointe.
Thanks so much. Take care.